There's something sneaky happening in the markets right now, and it could signal the top of gold, silver, and stocks, and perhaps continue the rally in the US dollar. I want to uncover this today, and should be an interesting conversation. Let's jump in. Welcome back to the channel today, guys. We're talking about stocks and indices, and of course, gold, silver, all the usual suspects, but I wanted to discuss something that is really important right now, which is the indices are a little bit down here today. Gold's on a ginormous run to the upside, but what is all this leading to? Are we going to see some ginormous drop in gold and silver and stocks? Is everything going to drop? And if so, why would you be signaling that, Nick? Well, it comes down to this chart right here. This is the US 10-year Treasury yield. And what that means is basically it's how much the Treasury, the US Treasury, is offering for their bonds. And what you can see here recently is this is going up right alongside the US dollar. And it is not at all coincidental. The dollar is actually going up because these things are going up. And I want to show you, and I say these things, I'm talking about the different bonds issued by the US government. The 2-year, the 10-year, the 20-year, the 30-year. And what we can see is all of them are on the rise here recently. But why is it? Well, on your screen right now, you see the two presidential candidates who are in the running for the upcoming election. Now, both of these candidates, whether you like them or not, both have track records of spending a lot of money. Whether you like certain ways that they spend the money, that is your personal decision, and I really don't care because that's not what this channel is about. However, both of them have plans to spend a lot of money. And when we discuss that, what does spending a lot of money do? Where's that money coming from? Well, if you're not familiar, the US government is actually broke. Like, it doesn't have any money. What it does is when it needs money, it calls up the Treasury and it says, hey, we need you to print a bunch of money. And what is that all leading to? It could lead to a period of time where we see inflation return. Here's an inflation chart to help map this out. We've seen inflation making some serious progress recently, with oil prices coming down quite a bit in the last year or so, and just the Fed doing a decent job at getting things under control. So when we take a look at this and we say, well, why is the yield rising here? Well, it's because the market is forward looking. The market is saying, well, if we get Trump, he's going to spend money. If we get Kamala Harris, she's going to spend money. What if there is a floor on inflation? What if we actually start to see inflation rise once again? And throughout US history, it's actually a pretty consistent pattern. A lot of times when you get these big spikes of inflation, we then see them come right back, and then they go away again, and then they come right back. And so with the inflation mission sort of accomplished, it seems, is there the possibility that we get a resumed inflation or a secondary spike in the coming years? That is what the market may be thinking. So what does that mean for you and I as traders? Well, it could mean for the foreseeable future, we see a stronger US dollar. And a stronger US dollar, which of course, remember, higher interest rates or interest rates not coming down as much, are both bullish catalysts for the US dollar. We've seen a recent breakout in the US dollar, and it seems like it wants to continue. Again, if we are going into a phase where we expect continued government spending to stay very high, it could lead to persistent inflation, which prohibits the Fed from cutting rates as much. That is exactly why, in my opinion, yields are up so much. And, here's the thing. There's a lot of uncertainty with who the election is going to turn into, or who's going to win the election. But at the same time, when we look at gold doesn't particularly fare well if we enter into a high inflation period. I know that may sound counterintuitive to more beginner traders, but actually when we saw very high inflation in 2022, it led to a very bad downtrend in gold. Why? Because the dollar gets very strong in periods of inflation as people expect the Fed to keep interest rates elevated. At the same time, this could take a toll in the stock market, which may be why the market is slightly lower here today. We've got the Russell down 1.7, which is an especially sensitive area of the market to interest rates, as smaller companies rely heavily on borrowing costs. The NASDAQ and the S&P 500 are down here today. However, currently we still have some pretty interesting signals on the Edgefinder's top setups page. I will be looking at this as it is my guide to finding potential watch list items. We've got indices still bullish overall, despite this temporary sort of uncertainty going on. I still like the indices quite a bit on pullbacks if I can get them. Same thing with Bitcoin, the Dow Jones, the Russell Index, and looking for some possible short setups on the Euro USD to potentially take advantage of of that US dollar strength. This has actually been a really good signal from the Edge Finder in the last month or so. And what we can see is some of the strong US economic data is part of the reason why the indices are getting some strong readings and why also the US dollar is perhaps looking favorable over the euro. When we take a look at the commitment of traders report, we can see, of course, where institutional money is most bullish and most bearish. They've still got very heavy and profitable positions on gold and silver. We've seen this all year long in the Edge Finder's COT report page. Same thing with the Swiss franc, the Canadian dollar, the Treasury, 10-year Treasury bonds, these things getting more bearish readings. And in fact, this might be an interesting play if you're looking at this and saying, well, if inflation stays higher for longer, then bonds may not be as attractive. And if you're unfamiliar with what I mean by that, remember that bonds typically go down in value when the interest rates are going up, because today's bonds are going to be less worthwhile if tomorrow they're offering higher rates. So why would I buy lower yielding bonds now when I could buy higher yielding bonds later? That's the idea with bonds. By the way, you can do all of this stuff for yourself if you are a serious fundamental analyst in the markets and trying to up your tools. Check out the Edge Finder down below in the description. There's a promo code there for you, and there's also a 30-day trial available in the description down below. Make sure to fill out that application if you're interested in trying out the software. Again, you get 30 days access. Just fill out that application in the description below. It will also be a pinned comment if that's easier for you. So when we look at gold, however, does this make me outright bearish on gold? Well, the answer is no, but it does make me a bit cautious of trying to chase this market. I do think that gold continues its uptrend until proven otherwise. This trend is innocent until proven guilty. And what I mean by that is pullbacks are likely opportunities, in my view, as they have been all year, to stay long, to look for long opportunities. However, currently I don't have any setups on the Edge Finder's top setups page, so I'm going to probably stay on the sidelines until I see something pop into the Edge Finder. But from strictly a price action standpoint, pullbacks look pretty good around this 2670 level, and the only reason I would get potentially bearish on gold would be if we started to see these levels of support start to fail out for buyers, right? If you started to see lower highs, lower lows, it would be a different story. But currently, as I mentioned, this trend looks innocent until proven guilty, and the bulls are still in full control. With oil prices low, this is also helping the inflation story, but keep a close eye on this. If you get oil prices starting to spike going into next year, that could seriously be the trigger to that resurgence in inflation story. Again, the inflation story is going quite well with the help of lower oil prices. But remember that when oil prices go up, it can cause a domino effect in inflation. Think about that cereal box sitting on the grocery store shelf. It uses energy to get there. If you think about it in a weird way, that cereal box got there because it was put on trains and trucks and automobiles and ships and moved there. And those things have cost associated to the transportation businesses. If their costs go up due to rising oil prices, so does the price of the cereal box as you take it off the shelf. I mentioned that I'm looking for possible setups on the US dollar, and my favorite current candidate is the euro against the dollar. However, this one's been painful to watch because I have missed the trade, and a couple different times I thought I was going to get the pullback into resistance, didn't quite catch it, and this thing has just been a one-way street to the downside. So I'm looking for possible breakouts and retests, or if we do see a resurgence in the next few weeks, I may look to possibly get short around the 50% retracement, but I've just been waiting on the sidelines for this one and will continue to do so until the trade comes to me. Bitcoin is also looking pretty good. You got the 38.2% retracement. We also have confirmation from the Edge Finder, so I'll be looking at this one as a possible setup going into this week. And if you want to hear more about that conversation about, the presidencies and how that could impact the dollar and yields, I had a really good conversation today on the live stream with Ivan about this very topic. So check out our conversation here and what he had to say.
What does T and H mean?
TH. Trump Harris?
What have both of them said?
That they're going to cut costs and spend our money reasonably?
Opposite. They're going to spend ridiculous amount of money. I don't know how much, but they as far as I have seen, the reason it's actually political is that they are, I guess, promising money to whatever projects they want to invest into, and that's more money to the economy that we don't really need. But it's of course to win votes. So that's my little opinion of why we might be pricing, and of course also higher and better economic data coming out. But yeah, I think that is about elections.
That's a good point. And that's the bond market thinking exactly what you're pointing out. Okay, look, either candidate is likely to spend a lot of money, which could keep a floor on inflation for a while, which could also keep a floor on interest rates for a while. If the Fed is seeing, interest or inflation not going down any further, if it bottoms out around 2.4, 2.3 before we get to 2 due to, government spending picking up or kind of staying elevated, it's possible that the Fed won't cut rates as much as previously expected. And that's kind of what the bond market is thinking about. So yeah, it should be interesting to see where that goes. I actually would not be surprised if the bond market is a little overestimating how many times the Fed's going to cut next year, which is, partially why I'm also a little bit cautious on the dollar bearish side, Ivan, is just the idea that these guys, either one of them is they're going to spend a lot. The U.S. economy has been upbeat. I don't know. It's a difficult one for me. So I'm sort of caught in the middle. I do like the Euro USD short side, but that's the only currency pair that I'm like convicted on right now. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.